Hey folks, hope you're doing well out there today. We've got a lot to talk about. Wow, there was so much that happened this week in the markets and what's happening next week. Everything that I'm doing in the portfolio, the moves that I'm making as we journey towards financial independence. Next target is $2 million. We're at 1.4 million net worth. Thanks for being here, folks. Let's go ahead and dive right in. So the reason why the markets pulled back in large part this past week is simple. There's an escalation in the war in Iran. It's as simple as that. A lot of people are confusing this with the AI story and semiconductor trade is over, and they're really confused about this, or bad earnings and so on. It's because of the escalation of the war in Iran that causes oil to spike, which causes an increase in likelihood for inflation, which spooks the market. Why? Because the Fed is more likely to increase interest rates. The reason why that's scary for the market is particularly tech stocks. There's been a rotation out of the tech stocks. I'll show you a chart on that in a minute. Is because of this, the war in Iran. It's that simple. And we've been talking about this for some time. Even when there's peace deals and the war's over and all this, I've been saying the whole time on this channel, I think this is like day 17, this is not going to be a one and done thing. This is going to go on for a while. It's going to be a tit for tat. And it's not going to be days, it's not going to be weeks, it's going to be months and months and months. This is a big problem politically for the Trump administration because we got midterms coming up. They want this to go away. They did not want this to last through the summer. But that's not going to happen. It's going to be here for a while, and it's impacting the markets. But it's not because of AI that the markets pulled back. I want to show you something here. I'm bullish on AI because of this chart right here. This is free cash flow for the hyperscalers, Alphabet, Meta, Microsoft, Amazon. If you look at 2026 and 2027, the forecast for free cash flow tanks. Why? Because they're investing all of those hundreds of billions of dollars into AI infrastructure. But here's why I'm bullish. If you look at 2028 and 2029 and 30, the estimates for free cash flow double and triple by 2030. Why is that? Because of the return on investment in AI infrastructure. That's what's happening here. And so the reason why we saw a pullback in this whole year, why Alphabet, why Meta, Microsoft, Amazon has underperformed, is because of the free cash flow projections this year and next year. But if you look out 3 years, 4 years, 5 years, we're buying these companies for the long term. They're going to be very, very profitable. And so I don't think the reason why the markets pull back is because AI is over or because of semiconductor, the chip, the whole thing is done. It's game over. It has nothing to do with that. I want to show you my buys. So what am I doing? I'm buying the hyperscalers. I'm buying Amazon. I want to be diversified, so I'm buying small cap ETFs. I'm buying QQQ for growth. I'm buying Microsoft. Great prices, almost historic prices for Microsoft. I'm very transparent on all my buys in the account. American Express I'm buying because it is a quality name. It is the best. It's the best in its business. ASML, it has a monopoly. VTI, it's the core of the portfolio. VWO is emerging market for international diversification. Broadcom is part of the Elite 8 now. Got to have it in the portfolio. SCHD, it's one of the best ETFs for dividends. Costco, excellent brand, the best in its business. Physical gold for protecting the account. More Costco. VDE, this is the hedge for the inflation with the war in Iran. We're in an inflationary macro context, and we will be probably for the next decade. Amazon, I'm super bullish on Amazon. Caterpillar, it is really part of the AI play now for infrastructure. And then Taiwan Semiconductor. And so that's what I'm buying. Eli Lilly, one of the best in its business. And so that's what I'm doing. Another thing tied to the economy is we have to keep an eye on the housing market. Right now, housing market continues to struggle. Housing demand falls sharply near record lows in July of 2026. Record lows, it's really unbelievable how bad the housing market is right now. And I don't think it's going to change for some time. But the reason why we got to keep an eye on it is because of things that are going on in the market. When you look over in Korea, margin loans that are outstanding. So not only do you have people that are sitting on the sidelines who one, either they can't afford a house because interest rates and prices are too high, or they're stuck. They can't sell their house because they'll have to take on a higher interest rate. But if you look at Korean margin loans outstanding, the Korean market is particularly the stock market in Korea. It had a massive sell-off. They had many trade holds, and it's because margin is getting wiped out. It leaked over into the U.S. markets this week, which caused part of the pullback. And so margin loans right now, things are really frothy out there. This was basically part of the news cycle script with the wildfire smoke. I came up out of a call and went outside to get some fresh air, and it was super smoky. Trump saying he's going to add pollution costs to tariffs. Tariffs in the news for financial markets do cause more pullbacks. The market doesn't like tariffs. So this sort of just piled onto the narrative of the pullback in the market this week with, obviously what we saw with the war in Iran, and then with the shaky conditions in the Korean stock market with margin, and then, tariffs and this sort of commentary. And so what we've ended up seeing is a pullback out of tech, the pullback in rotation, $900 billion out of tech, and flowing into the financials, into health. And part of this is because of the war in Iran, but part of this is also because we have earnings coming. And I think that what's happening is people are looking at financials and health, and they're looking for a place to sort of like stay safe. That's what it is. It's like they're buying the narrative that, well, the AI's over, so I need to find a safe place. I'm going to go hide in financials and healthcare. And so that's what we're seeing. Shout out to all you've been a part of the channel. We're at 30 subs. Appreciate all your support, comments, likes, and being a part of the channel. Really do appreciate you. Thanks for being here. But here's the thing, folks. When you actually look at the market this past 5 days, the S&P 500 is only down 1.5%. People are freaking out like we're in a 20-30% crash. It's like we're down 1.5%. We're down almost, not even 3% in the NASDAQ. We're down less than 1% the past week in the Dow Jones. Now, when you look at semis, yes, semis have sold off, and this has been some pain. I put $25,000-$30,000 into semis over the past month, and I'm seeing it down 10% over the past month. No doubt about that, but going to be holding semiconductors for the next 10 years because the AI build out we're in inning number 2. That's what the CEO of NVIDIA, he came out and said earlier this past week. He said this is just the beginning, and he's 100% spot on. And really in the past week is where we saw most of the sell-off in semis. And so that's where a lot of the emotion and volatility was from the semi sell-off. But looking into this next week, I'm super bullish actually because Alphabet, Google, Tesla, got some really quality companies, some of the best companies in the world that are reporting earnings. And so we're coming into earnings season, and people are like, oh, the market's selling off, it's over. And it's crazy to me because these are just like 1%, 2% blips, and we're coming into earnings season of the greatest companies in the world. Now, here's something interesting I want to talk about. National debt, all-time highs, almost 40 trillion. This is where the Fed has their hands tied. They can't continue to increase interest rates too much because of the payments they'll have to make on the national debt. So, but at the same time, they can't increase them too low because of inflation. So that's where their hands are tied. National debt tops almost 40 trillion. Pretty interesting stuff to keep an eye on. And then there's also an argument to be made that things actually haven't grown since the financial crisis, the great financial crisis in 2008. And really all that's happened is there's just been quantitative easing and money printing into the market. If you do an S&P 500 over the Fed's balance sheet, effectively what it is just the Fed printing money into the markets. And that's why we've seen the market perform well, particularly in equities. It's a pretty interesting chart, something to think about. And you'll see that anytime there's major pullbacks, the Fed will prop things up. Look at COVID. I mean, that was the quickest recession that we ever had. And it actually created more problems, though. Inflationary issues, stagflation, and everything that we're seeing today. Look at the housing market I just mentioned. It's unbelievable. the problems that the Fed has caused. Now I want to talk about my portfolio for a second. I've been tweaking this for the brokerage. This is the lever for financial independence. It's at like 57,000. And one of the biggest mistakes I've made is not investing in the brokerage earlier on. The retirement accounts are good, but the brokerage, and here's how I've set it up. It's 20% VTI, and then we've got the growth plays in the hyperscalers and Mag 7. Now, what I was thinking about doing is increasing the NVIDIA allocation and Amazon, but I'm actually thinking against that. But what I am going to be doing is buying quality names like American Express, Eli Lilly, Broadcom, ASML, Taiwan Semiconductor, Costco. I think these names are going to outperform over the next decade by far. And so that's what I'm doing in the portfolio. Those are the moves that I'm making. Appreciate you guys joining today. That's all we got for today, folks. Let me know in the comments what you think as we continue the road to $1.5 million net worth. Appreciate it. Thanks so much.